Hi. So this outrage gets the entire post because it's one of the most significant outrages of our time. And the outrage is the behavior of Janet Yellen, Ben Bernanke, Alan Greenspan, and all of the cheerleaders who support them. So let's start with the cheerleaders. Susie Orman came out the other day saying, "I'm taking this year off." I guess she's between shows. "But it's hard to sit silently and watch these markets. Fed Chair Yellen, help us out. Commit to no rate increases." Well, it's actually quite funny hearing this from Susie because although I've never watched her show, well, I admit I have watched it once, she advocates personal responsibility, not paying for things that you can't afford. And yet here she is encouraging our central bank and central banks around the world by default to continue their easy money policy, which is essentially the government not living off its savings. It is the government going into debt, and the government debt is our debt. Never forget, the government doesn't produce anything. They protect us, but there's no production. The government claims to create jobs. They don't. Now, they have created the TSA. I presume that those jobs went to people who would otherwise be unemployed. So I guess I should moderate it by saying they do create some jobs, but not jobs that actually help the economy. Let's get back to the main actors at hand: Yellen, Bernanke, and Greenspan. Greenspan started this when the stock market crashed in '87, and Alan Greenspan, fearing that the declining stock market would lead to an economic collapse, reduced interest rates dramatically to jumpstart the economy. And it worked. 13 years later, we had a huge bubble in technology stocks, which are basically just hope stocks. It's very similar to today, where the very highest valued stocks, Twitter, Uber, and many others, are actually not even making any money. I think I saw figures recently that Uber's losing, I think, $100 million a quarter or a month. I'm not actually sure. They don't release this information publicly, so it's hard to verify either way. But the fact is that when stocks that have no earnings are very highly valued, that indicates a lot of speculation in the market. Alan Greenspan encouraged that. The tech bubble is his legacy, and the tech crash thereafter is just the bubble deflating. You can't have a bubble that continues indefinitely. The bigger the bubble gets, the more noisy the pop when it pops. And they all pop. The response to the tech bubble crashing was a further round of interest rate reductions to moderate the damage to the economy from that event. And that gave rise to the housing bubble and all of its attendant financial woes, subprime loans, which we sold around the world, by the way. And we all know how that worked out. That was the second big crash of '08-09. The response to that was what they've called, they being the Federal Reserve, has called emergency measures. And these emergency measures are 0% interest rates. Now, I don't have the ability to borrow any money at 0%, and you probably don't either. But the banks do, and they subsequently turn around and loan the money out at regular interest rates. The banks are borrowing at zero. Why are they being favored in this way? Here's the problem. You may think this only affects people who have a lot of money, who earn interest, and who really cares about the rich, and who really would stand up for the rich after all. But the problem is greater than that, because when you have zero interest rates, there is a huge unintended consequence. And the unintended consequence is the pension plans and the insurance companies are being bankrupted by it. Their internal projections are that they'll be able to earn 8% on their pension fund assets. And all the warning stories that you see now about pension funds being underfunded, that is only going to get worse. If you assume that you're going to earn 8% a year, your money will double in 9 years. So that's almost exactly the same time period that we've had zero interest rates for. These pension plans that were planning or projecting 8% yields expected to have about twice as much money today as they have. No wonder they're underwater. The zero interest rate policy is killing us. It's killing all of us, except for the banks. And let's not forget, the Federal Reserve is not federal. It's not owned by the government. It's not owned by us. It's owned by the banks. So why would we be surprised when the Federal Reserve acts in the interests of the banks? The banks own them. They're not a public-spirited entity. They are there to protect the banks, and they've done a fantastic job of it. The banks were insolvent in 08-09. I shouldn't say the banks. Many banks were insolvent in 08-09, and they were insolvent because the assets that they owned were not worth anything close to what they'd been worth previously. Well, instead of the banks being forced to take their losses, as we would be, or many of us have, the banks were allowed to continue on. Many of these bad loans were taken off their hands by the government, which means we own them now. Those losses are ours now. Where's the outrage over that? You can earn nothing on your savings. Where's the outrage over that? Pension plans, insurance companies are going to be failing because they earn nothing on their interest-bearing investments. Where's the outrage over that? I wonder if there's any outrage left here. Nobody seems to care. Nobody wants to be informed. And even those who are informed really don't want to make a fuss. They figure the adults are in control. Let's not get involved. Better people than we are running things. You've got people like Susie Orman, who should know better. Susie Orman preaches fiscal responsibility. I believe her show is oriented around should someone be approved to buy something or declined, as if Susie is a stern but kind parent, which she is not. She is an entertainer. She is nothing more and nothing less. Jim Cramer, a very bright guy, is an entertainer. He represents the interests on Wall Street. When you hear him talk about his friends, those are Wall Street entities. Those are not Main Street entities. To my left, you can see tweets, Susie Orman's tweet imploring Janet Yellen not to raise rates, and Jim Cramer, who obviously agrees and gives her high praise as, quote, the most commonsensical, if that's even a word, I'm not sure, individual in finance. This is the same Jim Cramer who called Lenny Dykstra one of the most naturally gifted investors he'd ever met. Lenny Dykstra did not turn out to be as good an investor as Jim thought. But the purpose of this post is to wake you up. The situation is bad and getting worse. We're still at 0% interest rates. These are supposed to be emergency measures. These measures have been in effect for almost 7 years. Is the emergency still ongoing? You would think so, but yet the same people tell us, on the one hand, there's an emergency, and on the other hand, things are pretty good. They're improving. So which is it? You can't have both. Either there's an emergency that justifies these rates, or things are improving. But today, people are able to say two mutually contradictory statements, the same person saying the mutually contradictory statements at the same time, and nobody calls them on it. Well, I'm calling them on it. Get rates back to where the cost of capital is reasonable, and you stop malinvestment. You stop investment in factories and mines that are not justified because there's no real demand. Keep in mind that this situation will not change. The Federal Reserve is a highly regarded institution. There are a few cranks who call for its abolishment or its being audited or controlled, but they've successfully evaded all of those requests. As a matter of fact, they've even had an incident where inside information on their musings and deliberations was leaked. And when that investigation began, somebody on the Federal Reserve stopped it. A reporter for the Wall Street Journal called Pedro da Costa actually called out Janet Yellen on this exact topic, demanded to know who it was who had derailed the investigation. Pedro da Costa doesn't cover the Federal Reserve anymore. As a matter of fact, he doesn't even work for the Wall Street Journal anymore. How many noble people have to fall by the wayside before the rest of us wake up? I implore you, wake up.